So we were profitable from first year. So I never used $1 million that I raised. Actually, entire sales team left. I had to rebuild entire. So for 1 year there was no head of sales. So I sold back again.
What changed in you?
It's never about only the money. It's always also about identity and what you're going to do next. I don't think SaaS can exist in a similar avatar as it did in the last. You are a change maker. I think is the best time.
At one point of time, Eka Software was the largest profitable SaaS business out of India. Manav Garg, the founder of Eka, is now running one of the largest venture funds in India, which is investing in AI businesses. And this is a masterclass in building B2B businesses. This is the Founder Thesis podcast, and I'm your host, Akshay Dutt. Manav, welcome to the Founder Thesis podcast. What was the birth of the entrepreneur in Manav? Like, if you look back and connect the dots, what was like the awakening of that entrepreneurial spirit in you? Like when you first realized that you want to do something entrepreneurial, वो कीड़ा कहाँ से आया, basically?
I think it goes back to the background that I grew up in. I grew up in a very small town in Punjab called Moga. And if you look today also in Punjab, a lot of my cousins and otherwise family friends, they all run small scale businesses, small manufacturing plants where you can earn anywhere between half a million to 1 million, earn 20-30% profit, and the living is extremely good given the small town nature. Therefore, at one time, Punjab has a highest per capita GDP in India at that time. So I grew up, everybody was just doing the business. They even won't finish their graduation. Most of my cousins would just do, like, in the middle of the graduation, they will go back and start something using bank loans. So that was the environment I grew up in. Then my father used to work for Nestle in India. He was actually the plant manager for Nestle, one of the divisions which make milk powder. So then he left his job and started
The
trying.
plant was in Moga.
So Nestle's first plant was Mocha because Mocha is known for the best quality of milk in India.
Okay. Hmm.
Yeah. So Nestle decided to put the first plant in India is in Mocha. Still there. It's the largest, very very large plant. So my father used to work there, and he is an excellent engineer. And given the nature of people around you, he also tried the business. I think 3-4 times. It didn't work out any of the time. So I have always seen that growing up that he will earn some money, then he will feel like doing some business, won't go back, won't do well, then go back to business again. So I learned a lot of resilience, understanding, going through ups and downs during those days. So I think that was always in my mind that I want to do something of my own. In fact, after I finished my engineering at REC in Jalandhar, I decided not to actually work. Though I got a job in Blue Star, I worked there for like 2 months in Delhi, and I thought I will also start something like that. I put up a plan to start manufacturing hardware pipes, which are used in bathroom fittings. And Chandigarh is known for the entire. Today also Jaguar, for example, the brand of hardware bathroom fittings is based in come out of Chandigarh. So I thought I'll put a plant like that. Back in 1995, it required 70 lakh rupees, which you can imagine is $100,000 is massive money. So my parents didn't have the money. So I wrote an MBA exam and went to Indian Institute of Foreign Trade. So it was always in my mind that I want to do something on my own.
Hmm. So after IFT, did you sit for campus placements? Did you take up a job, or what did you do?
Yeah, so at IFT, I was fortunate enough to, as you know, in MBA colleges, everybody wants to join Unilever. So I was fortunate enough to be in the final interview process. There was one more trading company called GP Group, which used to post you outside of India, where the compensation was like, everything put together north of $5,000 to $10,000. You get good cash compensation, fully house paid off. You travel around the world, so that was also equally good job. But I wanted to be in India. I want to. I had this craze in the last 6 months of IFT that I want to brand India. Even till today, India is, and you see a lot of D2C brands coming in. India is highly underpenetrated in terms of brand. So I made an entire thesis that okay, we should do branding more of India. India is so much of mass market brands are very very few right now, and that's how Unilever. And so I So campus has this rule that one person, one job. So my final interview for GP Group came before actually Unilever final interview, and that's when so they called me. So GP Group, there were two managing directors who came for the interview process. They called me and saying, "Okay, fine, Manav, sit. What do you do? What do you want to do?" I said, "Please let me go. I have just come here as a formality. My Unilever meeting is going to come after this, so I would love to, just say hi to you guys. I can chat for 5 minutes, but I am not really interested in joining international business. I love India. I want to be in India. I want to brand India." They said, "Fine, Manav, since you're here, why don't we chat for 15, 20 minutes, half an hour? We get to know you, you get to know us. Fine, you don't want to join, it's okay." So what happens is to in the trading company, they would want you to, you should be able to travel, you should be able to open to, some amount of drinking, some amount of smoking, though there was no push, but you generally should be able to entertain people as well because it's all about global relationships.
Wining,
Yeah,
wining and
wining,
dining.
dining, yeah, global relationships.
Yeah.
And I am from a, Bania family, total vegetarian, never had drink even in college, nothing. So I said, I don't drink, I don't smoke, I don't feel like traveling out of India. I'm a diehard Indian national. So, it's not suitable for me. That's okay, fine, doesn't matter. Tell us what you want to do. So I told them the entire thesis of how can I brand India. They asked me a lot of deep questions on why branding will work, which areas it will work. I had a lot of thinking on that, so I walked them through that. Especially that time, I thought children clothing and the clothing is still underpenetrated. The entire fashion and the garment industry. So I spent a lot of time talking to about them. They asked me about how will you source, what will you do, and after half an hour, they said, "Okay, we want to select you." I said, I said, please don't do that. I don't want to go to outside of India. I am from Punjab, where people don't even come out of the state. Going out of country is very harsh for my parents as well. So I want to stay there. They said, no, we'll anyway offer you. If you want to join, it's up to you. I said, why are you selecting me, by the way? I am not interested in trading. I am not interested in wining, dining. So what is that you like? He's saying you are doing lateral thinking. And actually, in trading, the people who make money is the one who can think laterally. So therefore, we would love to offer you. It was obviously very lucrative salary. First posting was in Bangkok, then Singapore. So that's how I ended up going abroad for my IIT days.
Okay, fascinating. What does lateral thinking mean?
Lateral thinking means when you can think out of the box. So, see, basically, what happens is that in a trading world, let's say now tariffs are going up and down. I'll give a different example. Now everybody is saying, okay, I cannot. Tariffs on cars have gone up. My business will go down. So if you're an ancillary industry, you're going to be doomed, or think like you're doomed because orders are going to come down. So trader will see an opportunity in that. So trader will say, "Oh, world order is changing. It's really good for me because I am very flexible. I can travel abroad. I have relationships in the US, relationships in Germany, and relationships in India. Let me see what can I do. Can I now work the other way around? And where can I make money therefore?" So basically, every crisis or every massive change in a geopolitics in the country or in the market actually is an opportunity to make money as well, right? As you know, and therefore, good traders typically thrive during volatile times. Even in the stock market, it's the same thing. When it's very volatile, a normal person can't make it out, right? Because there's no secular trend. If it's secular trend, you and I can also invest and make money, right? Because only going to go up, like it was happening till 21. From 17 to 21, everything was just going up. So all VC industry or PE industry or stock market, everybody made a lot of money, right? At least on the books. So everybody looking good. But when market is going up and down, and Trump can get up in the morning and make a new story, and market can move. That's where you have to be very very fast on your feet and thinking about it. So that's where it really helps.
Okay, fascinating. How many years did you work at GP Group, and did you make them a lot of money?
Yeah, I did. I actually was very fortunate that I get to work with, my head of desk was from ex Goldman Sachs, called Jens Nelson, and also Chairman Kirit Shai was very, very good. And other managing directors. The culture in GP was really, really good. It's very entrepreneurial. You can go up to managing director and chat with them, understand how they're thinking about it. So I actually thrived in that environment.
And you
I
were doing
actually
commodity trading.
Yes, I was doing specifically. I started on rice trading, which was the largest for the group at that time, and because Thailand, Vietnam is very big in rice, so they started with that. So that's how they were very big in rice. But Jens Nielsen, my boss, started the green coffee trading desk. Green coffee is the second largest trading commodity in the world. The countries that drink actually, the countries that produce don't drink that much, apart from India and Brazil a little bit. So all of them export. Brazil, Colombia, Vietnam, India, they're all net exporters, and the buyers are all developed countries. All of Europe, Japan, US, large buyers. So actually, when I joined the desk, it was about $50 million in trade. By the time I left, it was about $1 billion in trading book.
Wow.
I built the entire Vietnam vision for them. Vietnam was very small in coffee at that time in 1998, 99. So I used to go to Vietnam almost every month, put the warehouse, helped grow the origin on this side. Then traveled a lot to a lot of buyers like Lavazza, Nestle, all the big names in coffee that you see, Folgers Coffee, which is P&G, Kraft General Food, and I built those relationships with the buyers on the side. So it was an extremely good relationship, experience, very very enriching, and also a lot of thanks to the GP Group culture to be able to give you that much of independence at that young in age. Right? You're literally dealing with a lot of money and a lot of up and down. So my boss also supported me, chairman supported me, so it was really really good experience for me.
Amazing, amazing. Okay. So, when did you move on, and like, what did you do next after?
So during this entire experience, I would have met about like maybe so my I tell you my day was used to start at like 7 a.m. because Japan will open, and I will finish my day at 2 a.m. in the night because I used to make
Yeah. Okay. Uh,
calls because I grew the desk from 50 million to $2 billion in book. And the way it happens is I have to build relationships across the world, right? So I used to call the buyers in Europe and US. So whole evening and night will go there, and then mornings will go in Asia, and then buying from Vietnam. So that's how I understood. Initially is that I just took the directories. Those days there was no internet, was not that prevalent. So I used to buy these coffee directories, and you start calling companies and saying, I am so on and so forth. I am from Asia. We can offer you coffees from Asian origins, which is Thailand, Vietnam, India, Indonesia. So started with that, and that's where the rigor came in, and that's how I then started traveling and meeting those customers. First with my boss, then alone, and built relationships. And during that exposure, I understood that all of us are doing all the work manually. For example, if I will do the trade, I will write on a piece of paper, give it to somebody in the back office. He or she will enter in the spreadsheet, and then we are trying to understand what the position is in the morning. Sometimes numbers are wrong. We are scrambling when market is moving, like especially in these days. Without system, it will be very very hard to manage during these times of such high volatility. So what I
and
did, yeah,
this was what, like early 2000s?
correct, early 2000, yeah,
Hmm. Okay.
and that's
Most
when I
of the
realized
trading
that
was on the phone. Like you would call and
yeah,
place orders. It was
trading
not
is
like a
always on the
online.
phone. Trading
Okay.
is all nothing online.
Hmm.
Commodity trading
Hmm.
today because all relationship driven. They are very large value contracts over a longer period of time.
Okay.
And
Okay.
people buy from people, people sell to people.
Hmm.
Systems, therefore, system-based trading has not worked. Apart from, of course, on the stock market or on the futures side of things, but the
Hmm.
physical trading is still very, very physical in nature. Because you have
Hmm.
to see the
Okay.
crop, you have to really see, how things are happening on the ground.
Counterparty risk.
Counterparty risk also, you have to understand the crop also, right? Your weather will change, things will change on the ground. See, because when you talk about agri commodities, the quality also matters a lot. It's so, same bean or same rice or same wheat can be different with different moisture content and different, sunlight and everything else. So things changes on the ground all the time.
Hmm. Hmm. Hmm.
So you can't simply, it's not a standardized product you're buying. It's not a stock market feature or a Unilever share which you can buy, which is pretty standardized. Uh, so therefore, futures market is standardized, but the physical trading you have to go and feel and understand what is happening on the ground. And that's the reason you go down to those regions and understand how the farmers are thinking about the crop, what the weather forecast look like, how is the soil quality, therefore how is the coffee quality going to come,
Okay.
uh,
Okay.
and how the crop will be bumper crop or not bumper crop, how the yields are getting
Hmm.
changed with the weather
Hmm.
patterns.
Right. So you discovered everything was super manual. Then what?
So during that time, if you remember, 2001 was a dot-com boom period. So my initial idea was to develop what you just asked, an online exchange for coffee where people can buy and sell, but can also finish the entire back office workflow. After you buy, a contract will get created, then shipment will get managed, invoices, and the entire contract life cycle, futures option. That's how the original idea was. But by the time I got started, 2001 came and passed, dot-com burst happened. But I still continue with the idea saying, okay, no, the back office has actually much more potential because the whole idea of starting the business was to automate the back office. Trading was okay. Since I was doing trading also, we thought automate that as well. So actually, therefore, that's what the idea of first idea was calling it, we used to call it e-coffee connect. That how do you connect buyers with sellers and do the entire back office operation. That's how actually the first idea, the idea germinated. And then one fine day, I decided to just leave my job. So actually, the whole idea of so I was in my this whole trading world doing really well. My boss was really happy. The entire thing was growing really well. In 2001, one of my batchmates from REC, actually, Rajiv Bajaj, he has to remember his name, he came to Bangkok for his honeymoon. And he's saying, we're just coming from Delhi, we'd love to stay in your apartment. I said, fine, you come and stay here, I'll move with my friend. So they had started with another friend of mine, he has started with a friend of mine, a company called neverdistant.com, which is a flower delivery shop for online flower delivery. So that's why I got to understand, okay, there's something called internet and something called systems. And I started reading about systems of how Microsoft and other initial VB and all this works. Given I was an engineer, I started understanding that. So that's when the idea started. Okay, maybe there is a systems approach to the entire thing we're doing. So actually, I built a small system for our desk, which was because I was talking to like 400 buyers and sellers in a course of let's say 1 week. So I created a database using Access first, where I can track who I'm talking to, what I'm talking to, what I did, create my notes around it, create kind of small intelligence CRM, you can call it in the modern day. I created that first actually,
Okay. For
and that's
your current employer.
for automating my work.
Okay.
Because imagine, on a spreadsheet, there's 400 buyers and sellers and understanding who's saying what. So I create a kind of entire customer profile, like a customer relationship software, so I can understand who's doing what, how much each person is buying, what does it look like. So I did all those things. So that's how the idea of the system started, and that's how e-coffee connect happened, which I told you before. And
You quit and started e-coffee Connect?
yeah. So when I was starting up, I
Okay.
was very clear that I cannot do both things together. Trading, I was working from, I told you, 7 a.m. till 2 a.m.
Yeah.
How am I going
Yeah.
to do anything? There's no time available, including weekends. On Saturdays, we'll be reading and consolidating all that you have done over the week. So there was no time. So I decided just like that. The idea came to me, and next day I just went to him boss saying, I'm resigning. I want to do this. He said, it was totally surprising. You have no idea what you're trying to do. Software is nothing for you. If you stay in trading, you will make a lot of money. But I said, no, I want to try this out. Doesn't matter. So
Hmm.
that's how actually the
And you started as a solo founder on this.
as, my initial idea was to start with this person Rajiv I told you, who had come, but then he backed out saying I can't move to the outside of India. I didn't look good, so I ended up starting a solo founder
In Thailand only.
in Thailand only. Yeah, I had nowhere else to go
Okay.
at that time.
Hmm.
I had no
Okay.
capital also, right? I had only a few years of work, so there was no capital also. So
Hmm.
first I had to figure out capital. So
Okay.
what I did, I started going out to through some relationships in Hong Kong. I got to JP Morgan Chase guys during those time, few other funds, uh, and few other professionals. They all met me. They all liked the idea. They said, but we really can't fund you. We have no background in software. You never built a business. You're not from a family background of building businesses. Uh, there's nothing in your actually life story which is telling you that you have some huge spike. You're not from IIT. You're not from IIM. So internally, it's very hard. Your case is very hard for me to push, even though I like you personally. But internally, how do I fund you? So none of those materialized. Then I decided that I should go back to the chairman of the group I used to work with. He is very very entrepreneurial. His name is Kirit Shah. He is that family is what Forbes 19th in Thailand. So very wealthy, very entrepreneurial. So I just went to his office. I just knocked on his door. I went back to the office, knocked on his door, saying, "This is what I'm doing." And within what I think half an hour, he said, "Fine, I'll back you." He said, "How much money?" I said, "No idea." I said, $1 million. They said, "Fine." Then he made me meet all his, partner or managing directors, and that's how actually the journey started.
Amazing. Okay. So, but you're not. You didn't actually. You're not known as the founder of eCoffee Connect. So, what happened?
No, then we changed the name because after so then the first issue was how do you build a software. So I said, okay, fine, let me go to India. I came to India, I went to Delhi, Bombay, Bangalore, met a lot of services companies on how the first version can be built. And that time I got clarity that it's a sort of e-coffee connect. It has to be a back office system. So we changed the name as we go along. We didn't
Okay,
change the name for the.
you pivoted the idea from a marketplace to a something which helps the traders to manage their middle office is the right word for this, right?
Yeah, back of front, middle, and back office automation. So instead of see, trading is the even before front office is a part of the front office. So it's the entire automation of front, middle. But so instead of starting from a trading, we started from a contracting. Once a contract is in place, the physical contract is in place. Uh, from there we started off. So our idea was so the back office automation or the front to entire office automation was always there, but we take off the online trading part. We didn't build. We built a little bit to
Hmm.
start off, but then we said, okay, it doesn't make sense, and we started building just the entire automation suite. So it was not clear to me that see, I'm not coming like a software founder, understanding the industry, market size, none of those during that time. And this was in year 2002, 3, 4. So the ideas of how to build product was also very nascent at that point in time.
Can you describe what your software was solving, the problem?
Yeah, the software problem solving is for any trading companies are nothing but the supply chain companies. Don't think of trading companies as somebody buying and selling. So what happens is when I'm a GP Group or a Cargill or Louis Dreyfus or which are large trading companies, the way it works is you are basically guaranteeing a Nestle that I will deliver you X quality of coffee, X amount at this particular time. Because Nestle will then plan their inventory and they'll plan the entire manufacturing accordingly. So you can't really delay things just like that to a large extent. Now, to do that, you have to make sure the entire supply chain is managed properly, right? And the entire risk is managed, which is one is the risk of delivery, other is the risk of price. Because Nestle will say, I'll buy you at this price, but and I'll buy you for the entire delivery for the entire year. Every month, please deliver me 1,000 tons of coffee of this quality from this particular country. Now, if you're a trader, what you will do is you will go and secure the supply from Vietnam, Thailand, uh, and then you will make sure that it is shipped properly, the quality checks will happen, all the legal export work is done, shipment is done, entire shipment management, and then you will make sure the quality is delivered to the Nestle warehouse at a given time and the given price. Now the price is also fluctuating during it's all futures and options, it is not fixed. So you have to manage the price also. So this entire thing is called management of the entire supply chain risk and delivery. So that's what the trading company does in physical time. So now imagine entire this flow is physical in nature and it is doesn't have any system. So what I built a system which can automate the entire thing. Therefore, you as a trader will know what is my mark to market, how much money I am making at any point in time, what is my position, which means how much should I buy, how much should I sell, because you will do like thousand such contracts with Nestle, with Kraft General Food, with Folgers, with other small roasters in around the world. So now you have a book like a stock market, you will have a book, a portfolio built up where you're buying, selling, and you have to manage that entire thing. And things will keep on changing at every point in time. And so that's the system. That's what system does.
Okay, fascinating. So you, which year did you launch this?
2004.
So 2004 is like when software was sold in CDs, right? It was not really a
Yeah,
SaaS market,
no software.
none
So
of
the
that.
first, so my version was so that time ASP wave had come, which is application software, uh, uh, where you can actually do some what you call today managed hosting. So
Okay,
therefore, the architecture I chose was a J2E architecture, which is a web-based browser. It was one of the first web-based system in our industry.
okay.
So we built the entire system using a web browser, and of course, it has a middle tier and the back office Oracle database. But still, it was not enabled on the cloud. We had to go and implement on the client side, on a client server.
Because cloud as a term was not even coined at
It
that
was not
time,
there,
right?
not there. It was
The
ASP. Used to
cloud
call
itself
ASP.
as a term. Yeah, yeah, yeah. Okay.
Yeah, it was ASP, but software architecture. The reason I'm giving this background to architecture by chance. It's not that we had huge tunnel vision or vision at that time, uh, but we were able
You were
to.
lucky.
Yeah, we were just right time, right place. So design choices were. in line with a later wave in cloud. So entire software got developed in that. Yeah, that was yeah. You're right. That time software was in CD.
Okay. So you had this $1 million. How did you use it? Like you gave it to a IT services company to build the product for you. Then you set up a sales team. Or like, what was your go-to market journey? That 0 to 1 journey.
So zero to one journey was, first of all, I had some really good relationships. As I told you, I still believe the cold call really works, or whatever what people call it cold call. Actually, it is very warm. You are like, I'm calling the phone and calling Akshay, how are you doing? I'm coming to see you in Japan. Okay, okay, in Tokyo, we'll have a meal or a coffee. So actually, what happens is you develop good understanding of what key problems the person is solving or facing, and so therefore I had built these relationships around the world. So I first went to them, understand what they're looking for. Actually, I designed the entire system on paper first, almost about 300, 400 screens. I first got it designed on paper by traveling around for 1 year.
Okay.
and,
Like
and, and
what today we call as co-building with customers, something
yeah,
like
what do you
that.
call design
Okay.
partners today? What do you call design
Okay.
partners today?
Hmm. Hmm.
But
Hmm.
it was very physical. I will sit in their office for 1 week, sometimes 2 weeks, understand from workflow what they're looking for. So I did that first, and people used to like me because I could speak their language, and then I could translate back into design.
You
Because if
knew
you're
the
a trader,
jargons.
yeah, not only jargons, also the deep problems. So the managing the P&L and end of day and mark to market is the biggest thing, because the market is moving.
Hmm.
You really want to know whether I'm making money or losing money, and what should I do at that point in time. So people understood. I could understand deeply how they're working, their workflows. I speak the language, so that really helped me. So the moment the first version was launched in 2004, we got the first customer immediately. We signed 5 customers in the first year, so we were profitable from first year.
Wow.
I used to charge about $70,000 to $100,000 per customer at that time. We
Wow.
got 5 customers in first year, $500,000. My expenditure was hardly 200K, 250K at that time in India.
Wow.
So yeah,
Amazing.
so I did all the sales till I think about $4 5 million. I was the only person doing all the sales.
Hmm. What was the journey to hit $5 million? It was
I
like
think
just within the same market, find more customers or increase the contract values with existing customers, or
so both. So first we started selling at $70,000. So first issue was, how do you price? So we thought, okay, we will save at least one back office person job in Europe. The composition of one back office person in Europe is about $70,000. So let's price it that. That was simple mathematics of pricing at that time, or logic of pricing. So first 5 customers, we actually understood what it takes to implement a system, because implementation is a very complex system. It has data has to match, number has to be perfect. Uh, so I learned that with first 5 customers, which is about $70,000 each, and then come a huge opportunity to participate in the RFP for $1 million contract, uh, which was from Noble Group. And before that, I think I must mention that there's a person called Tishul from Louis Dreyfus who also really helped us. Louis Dreyfus was like is globally about top 5 trading companies, and Tishul and his team from London really helped us understand how a large trading company works. I had a good understanding with first 5 customers on how mid-sized companies work. Mid-size means turnover between, I would say, half a billion, around that turnover,
okay,
and large
okay.
large would mean 5 billion, 10 billion, $15 billion turnover. So Louis Dreyfus is
Hmm.
a very large trading company. So he and his team gave us entire knowledge of how a large trading companies work, because with scale, the data on the screen changes, the data in the back end changes. So we went to a lot of learning. It was very hard because as Indian engineers, we were trying to still figure out how to build a product for a industrial scale, scalability and reliability. So they were very patient with us. So that's how we learned. And then came an opportunity to 2000, I think 6, around at that time, to participate in a very large RFP, which is from a company called Noble Group. Noble Group was that time a listed company in Singapore, very, very large. I think 12 or $20 billion company.
Again, agro commodity trading.
Agri, we focus on agri only at that time. So there was this gentleman called Dmitry, Russian chap, CIO. He actually called me saying, Manav, I heard about your company. You're really small, but I would love to give you an opportunity. And at that time, we had no clue how to fill an RFP. Because RFP was just long, 100 pages RFP. We were very confused. We sent some, I would say, trash version back, which I had no clue. So he called me and he literally said, "You guys are not professional. You don't know what to do." Actually, I told him that they don't get angry for the first time. He's saying, "But my CEO is not going to look at it like that. It's a loss of face for me." I said, "Okay, calm down. I'm going to come to Singapore tomorrow and I'll sit with you." I said, "Don't come. Don't see my face. I just don't like you. This is not the way to be." That's where again the previous skills come forward. I said, "Fine, let's have a coffee." I flew actually to Singapore without knowing him and sat in Starbucks below his office. He came down, then he spent a day, then he realized that we really have substance. And that's how then we went through the proper process. Uh, their team evaluated the product. That was the first $1 million contract. It was a big deal. Even today, $1 million
Amazing.
contract is a massive deal. Uh,
Mm.
so that account become, I think, $10-12 million account for us in the next 3-4 years. A lot of growth came from that. So therefore, journey
10
is
million
first.
annual revenue from that one
No, no,
account.
overall, there was
Okay.
no
Hmm.
recurring revenue. Remember, it's a CD based or a
Ah,
client server software. It is not a cloud. There was no cloud in
right.
2006, 2007, 2010.
Hmm. Hmm.
There's no cloud.
Hmm. Hmm. Hmm.
The account become very large for us. We also signed other large customers like Cargill and Costco International and so on and so forth later on. But that was a pivotal moment. Both Louis Jeffers' teams, Kishore and his team, to give us understanding, and then Dimitri and his team at Noble uh, to really give us an opportunity to build a global scale business using that.
Hmm.
A lot of
Okay.
learning, a lot of
Okay.
revenue. Team also worked like 18 hours a day. We used to sleep in the office because managing this company is really, really hard. We
Hmm.
had no understanding sitting in Bangalore on how to manage such large implementations.
Hmm.
So that
Okay.
really made a solid base for us.
Hmm.
And from there,
By
I
to
start, yeah.
Sorry, please continue.
Uh, and then we started putting things in place to build a global sales team. Yeah,
Hmm.
you were asking something.
Uh, by 2010, what kind of revenue were you at?
I think 2010. See, by 2012, we were at 14 million dollars, earning about 5 million in profit.
Oh, wow.
Uh,
Okay.
yeah,
Incredible.
always profitable. So from
Hmm.
2004, not a single year when I was not profitable.
Hmm. Hmm. Hmm.
So I never used a
Okay.
$1 million that I raised actually.
Oh, wow.
I only used two
Amazing.
hundred thousand
Okay.
dollars. That's
Hmm.
all.
Hmm. 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 Okay, okay. I can see your total lifetime about, as per traction, you've raised about 55 million roughly.
That's right. That's right.
So what was the fundraise for?
So 2009 we raised from Nexus to 910. So I was sitting with Kirit Shah, who was the chairman of the group. He was on the board. He is on the board. He was on the board before I sold the company now. So we discussed, okay, we don't know how to build a large scale global company because we could sense that we're scaling revenue is profitable. We should get a venture capital firm who can help us to think globally. Uh, so that's how I had met Naren and Sandeep Singhal from Nexus, and Naren, who had co-founded Nexus at that time, along with Subir.
Yeah, you said we should get
Yeah,
a venture capital
yeah.
firm.
So we should get a venture capital firm who has a global experience. So when Nareen and Sandeep Singhal of Nexus, they were co-founding Nexus in India at that time. So I ended up meeting both of them, and I think then decided to invest in us. We thought they were good partners. Uh, Nareen is based in Valley, Sandeep based in Bombay here. That's how actually we got into a business with Nexus or partnership with Nexus. And the idea was and they really helped us that time to understand how global companies work. I met few of the companies during that time, and the journey started with that. And then we grew really fast after they invested. As I'm saying, 2012, 13, we touched about 40 million, 5 million in profit. And the thought process back then was, now can we use it as a leverage to acquire more companies? Because now we are very profitable. We are internal accruals, I think $8-9 million were on a balance sheet. Plus we raised
Wow.
capital, $3-4 million, I think, at that time from Nexus to start off. And the idea was, can we now scale the business by acquiring companies in US and Europe? Can we enter into other areas? We were only primarily agriculture focused at that time. How should we enter into energy and metals and few other areas? And that's the point in time. We said, okay, let's put this entire acquisition strategy in place. And that's where the Silver Lake came in. So from there, we raised about, I think, another 35, $40 million. The existing investors also participated. GB Group participated. Then Nexus participated. That's how the fundraise went to 55 million total overall of the company, and that's it. And then we acquired two companies. Revenue in 2014 went to about $34 million with 9 million in profits.
Wow.
Yeah,
Okay.
we acquired one company in Australia, one in Canada. It was also very hard to acquire companies back then because the founders won't trust you. They will think how will an Indian founder will treat us, how will they treat our employees. So we went through all those things, selling Indian brand, saying we are global, how can we really help you. So company really expanded very very fast during that time.
What were the
And
learnings from these acquisitions? Like, how did you decide this is the right company to acquire? And did the thesis come true, or were there gaps in your thesis?
see, the entire acquisition strategy went on two things. One is that we look at the product gaps that we have. So we are focused in agriculture. We are not present in energy. So can we look for an asset which does energy? So that's how we identified a company in Canada. And then second thesis was how do we make money from that particular acquisition is through, okay, we'll bring part of the cost to India, especially the engineering cost. We acquire customers in the front end. If the revenue is sticky, we'll start generating more profits from that. So that's the thesis that we will. The thesis did come out true, but we found out that integration takes more time than one expects. It's simply not easy to move the jobs from there. It takes time for people to culturally assimilate. So those were the learnings in acquisition. I had very
And
good learning in
you,
how to build this. Yeah,
hmm,
I had a
sorry,
lot of learnings
please.
in before all these things in 2008 9. We also started building in global sales team. Yeah, that is also to how to hire a really good head of sales and build the entire sales team. We had this gentleman called Rick Nelson, who was head of competition at that time, called Triple Point. And then he moved on to ICE, which is the Intercontinental Exchange. He was heading sales there. So he then helped us build the entire sales team globally. So, and that's how we had a very good base setup. We had a global sales team in place. Engineering team was good scaled up. We knew how to do large implementation. So therefore, we thought it's a good base for us to scale now, to then do the acquisitions and move from there. So just to summarize, so we had a very good base. We had a global sales team in place. We had backend fully operational. We have reference customers. We're pretty known in the industry, in agri industry at least globally, and therefore we acquired those companies. So that's also we ran a process. We got almost 8 term sheets during that time from global investors, and that's how Silver came in. And we started acquiring companies. We acquired two companies very quickly. In 2014, we acquired two companies, both almost back to back. Uh, but then, so it was very good. We are probably the largest software company in India at that time.
Wow. Okay.
Yeah,
When you
$34
say
million.
largest software company, you're talking product companies, not like a
Yeah, yeah, product,
services.
product. Yeah. When you
Hmm,
use the word
hmm.
software, it's actually for product. Services, software
Okay.
services is called services. Yeah. So
Okay.
typical
Okay.
software means the product companies. Yeah, software product company. Just to clarify, and and that's how we thought we'll become 100 million in three years from then, because we're growing really really fast. But then in 2014 end, actually the huge crash came. The oil crashed massively. Uh, if you go and check, you will see massive oil crash happened, which even large companies like Shell and BP could not see, and the entire commodity price starts falling down drastically. I also decided to move to New York in 2014 because we said we'll acquire more companies, so I should move to the US. So I actually moved to the US in 2014 with family. And after I moved in August, and crash happened around September, October. So it was a uh, massive shock actually to the industry, to us as a company, because some of the companies went out of the business, our revenue started coming down. Uh, it was a very very bad situation to be in at that point in time. So actually, the revenue of the company started coming down from 34. It came down to 27. It came down to 25, and that's the point in time I decided, okay, this is a good time. I had about $35 million on the balance sheet at that time, even after acquiring two companies, because we had internal accruals as well. So I convinced the board, which took a lot of time to convince, that we should pivot to cloud. Uh, yeah, so that's how the whole. That's when I thought, okay, now cloud is going to be the future, so we should pivot to cloud and not remain as a client server company. So it was a big risk. I'm really thankful to the investors who support me also, because they invested behind a thesis of acquiring and then increasing profit, which is a very simple, straightforward, execution-driven problem. Uh, as against now doing a new R&D, nobody in the team has seen a cloud software. We all client server people. So how will you even build a cloud software is a massive risk, and then acquiring customers is another risk because all customers were not moving to cloud in 2014-15, if you remember. It was
Hmm.
early days of Amazon and Azure at that time.
Hmm. Hmm. Hmm.
But I
Uh,
yeah.
Help me understand the complexity of this pivot to cloud. Is it just about engineering problem, or is it also about pricing and sales?
So it's a multi-fold problem. So first problem is, so in a client server we will get $1 million license upfront, and then get 20 to 24% annual maintenance. So if I sign $1 million contract, I get immediate cash flow, and then I get 240,000 recurring revenue as a customer support revenue, right? So it's a very lucrative model, especially after you've done the hard work in early days, right? Uh, so now if you go to cloud, the same $1 million will become a contract of $300,000 typically. Its ratio is 2.5. You divide by 2.5 basically. So $1 million will be around 300, 400K ARR contract, including the support and maintenance. So therefore, what happens is your revenue top line will start coming down. Your profitability will get skewed, right?
Hmm.
And the cash flow will go out of picture.
Hmm.
That's the first fundamental problem of pivot from enterprise to cloud.
Hmm.
So where is the cash flow going to come from? You have the money on the balance sheet, but you're going to now put the money to fund your cash flows, basically. There's a first financial problem or cash flow problem to be solved, and a business model problem to be solved.
Hmm.
And then there's a technology problem that whether you know how to build a true cloud software, how will it scale? Will that huge data-driven complex workflow work on cloud? At that time, only HR software, travel software was getting built. ERP was not there fully on cloud. NetSuite was there, but not fully there for large companies. And the third problem is the customer adoption. Will the customer move? It's a trading is a sensitive industry, right? People are wary about the data processes. So will they move to cloud or not? It's a mission critical software. So those are the. It's very hard today. I'm an investor. I can empathize. That's a very hard call. If you put in $50 million, and you want to suddenly change the business plan. Uh, so if I'm an investor, I will push to sell the company at that stage, saying let's sell the company since the industry is changing so fast, instead of trying to pivot and take a whole new level of risk. You never know whether you can do it. If any one of these fails, company is zero basically. Nobody will buy the company at that point in time. So we had to.
But hmm. Sorry, please finish your thought.
So I was. So it therefore took 1 year to go through that step by step, convince the investors and the board.
As a founder, you could probably see that if you don't pivot, it will just. I mean, cloud. I don't know. Could you see that cloud is the way forward?
Yeah,
And
yeah.
if
I was
you
very
had
clear.
not,
Cloud is yeah.
right? Hmm.
I could have
Okay.
sold the company. I think in hindsight, if I look back 10 years back, other option, a real option was for me to sell the company as well.
Hmm.
Obviously, you get more, uh, mature or wise as you age and you get more experience. So one of the options which we discussed, but I didn't agree. I thought cloud is the right way to do. Probably the way was to sell the company at that time and then start all over again in the cloud. In hindsight, because what happens is when you pivot the company at that scale, we were 34 million revenue, 9 million profit. Your finances are getting hurt, cash flows, people's skill set. So the internal cultural change is also massive.
Hmm. Hmm.
Because see the cloud, there was no full buy-in of cloud into the. Please understand the situation during the internal team. We had about 400 people at that time. There's an internal debate also: is cloud going to work or not for our industry? So teams also kind of divided internally. So the
Hmm.
cultural change internally was massive, which I didn't realize actually. Whether your CTO, sales teams globally, your engineering leaders, they're all aligned or not. That was not the case. I underestimated that. I managed the transition with the board really well, I would say, or reasonably well. But I think I underestimated the transition required internally.
Hmm. What were the symptoms that made you realize that you got that estimation wrong?
I think people will not do the work. They will say, "Is it? I don't believe it's right."
Productivity.
Yeah, productivity, and they will come and say that this is not right direction. We don't think cloud is going to work. The person
Hmm.
who will build, they will say they don't know what they're doing because, see, you have an existing business to run, which is a substantially scaled business. Uh,
Hmm.
Even today, also it is good scale for India. Back then, it was a massive scale business. Uh, so you have a team who's running that, and now suddenly I say, okay, small team will start building cloud. Now the team who's building on this, they first think, what will happen to me? Do I have a career? Because Manav is talking about going to cloud, and I am sitting in an enterprise client server division, right? So that's the first issue. You could actually have and have nots.
Hmm. Hmm.
And then there's some people in the middle who will say, I want to go there, but I want to be here, but I want to be here, but I want to go there. So that creates a massive chaos.
Okay.
And the risk
Hmm.
of building. So our HR was very good. I think uh, they really helped us build. At that time I had this girl called Shuchi, and she really helped. Then Mumu, who was heading CTO, she said, I will give up my VP engineering position and start a small product on the side to see how cloud works. Uh, so I think that's how we thought we should pivot there. Uh, then some older people also started helping, but still the sales team never believed in it, so the sales team had to be changed. So I had to go through multiple changes in the team side.
Okay. Okay. Fascinating. How long did the whole transition take then? Like, by when was
So,
Eka a cloud
so,
company?
so we are a very very heavy mission critical system, as you can imagine. We imagine global scale companies, 50 billion, $100 billion in revenue scale companies. It took us almost 3 years. We started building 2016, and 2019 is when we were to build the first deployable version on the cloud.
Hmm.
Every year we could see the progress, but 2019 is when we got Cargill, Unilever, Craftsman Food. We got a massive validation from very large customers.
Hmm.
And a good thing happened that Cargill also decided in 2017-18 that they will only buy cloud going forward. So a lot of companies also. So all 3 points I said, we were able to build a product, customers able to adopt, and we were able to manage the cash flow. We went negative during those 2 3 years because we invested a lot of money from the balance sheet. Uh, Very tough time for us. Very very tough. Entire sales team
Hmm.
left. I had to rebuild entire. I was luckily, I had a backstop in me to sell. So for one
Yeah.
year there was no head of sales, so I sold back again,
Okay.
and then we acquired. Then we again rebuilt the entire sales team. So I think uh, I would say one learning is if you have a really, really strong HR and recruiting department, that really helps in transition. So I think HR played a very very big role because imagine the number of people transitions we are doing. Right, it's a global scale transition. It's not just in India. So that customers I could do myself because I had very very strong relationships with the customers. Because the
Hmm.
customers also have
Hmm.
to be told why you're changing the strategy. Uh,
Hmm.
so customers I could manage. Then I used really the HR really really well, and they really contributed a lot in managing this massive transition. Now number of people leaving, changing culture, changing people's priorities in terms of career they want to build. That was the biggest challenge I think. At
Hmm.
one time, a lot of I think one board would have thought that company is not going to survive. There's too many things moving at the same time.
Hmm. But like, how did you personally go through that time? Like, was it just pure grit, conviction, keep your
Yeah,
head
pure.
down, keep
Yeah.
executing?
Keep executing. Yeah. Just I believed in the thesis, right? So I think my conviction came from the thesis. I could see the world is moving towards cloud.
Hmm.
It was very clear to me that company has to go to cloud. That's what I'm saying. As I said before, the only thing now going hindsight is probably it is given all the culture and the people transition and the customer transition, it's easier to sell the company and start all over again. Perhaps,
Ah, okay.
perhaps. Yeah,
Right.
instead of going
Got
through
it.
this massive,
Hmm.
massive transition. But I was just
Yeah.
heads on, focus on it. And there were core people around me. See, my management team stayed with me for almost 10 years. I think I should recognize them on this podcast as well. I think we had people like Asashuchi from HR, Momo from CTO, Amit from CFO. Then I had people like Rajiv and Sanjay from professional services. The entire team stayed with me for 10 years, 10, 12 years. So I was very fortunate to actually work with a team who stayed during the entire ups and downs of the team.
Hmm.
Vinayak
By the
stayed, who was the
time,
original architect here.
hmm. By the time 2019 came and you started deploying cloud, what was the revenue at by that time?
So we touched back again at what 17, $20 million per recurring revenue now.
Hmm. Hmm.
So,
Okay.
so, so yeah. So a lot of, as you can imagine, a lot of financial engineering would have gone through to come back to the same scale. So 20 million means $50 million in enterprise revenue.
Right.
So we could sell really
Hmm.
well. We got really large contracts. Our revenue really scaled well. Uh,
Hmm.
And that's the point. Company was not profitable; it was just mildly profitable. So idea was to make it hugely profitable, and that's when we thought now is good time to exit. Think about the exit as well, because Silver Lake had been in the company for now 6-7 years. It was time for them to exit. Nexus has been there for 8-10 years. Time for them to exit. So that's how I started thinking about the exit in 2020 actually.
What changed in you? Because you were, uh, I mean, most people who start a business don't think of selling it. And you were in that mode in 2017 when you decided to make the pivot to cloud. Something changed, right, to make you consider exit as an option. What was that personal evolution you went through?
I think the personal evolution is two the things. One is that investors are you are the captain of the ship, and investors are part of the journey. Right? So you have to make sure that you have to give exit to them. So that was the first thought process. Now I could have bought their shares back. I could have got some other investors in, change the
Or
capital.
IPO also could have been an option.
IPO, we were based in Singapore headquartered at the start because I started the company in Singapore. Uh, so at that scale, I think IPO in India is possible was possible, but then there was a lot of regulatory issues at that time to move to India. I think for me, the main discussion point was how next decade is going to look like, and I could see the early signs of technology changing again. ML was coming. I can say now in hindsight, okay, my timing was perfect in terms of AI, generative AI, but there was no generative AI in 2020, 21. The thought was that I should look at something else in doing it because the industry that I was in is a vertical industry. And if you look at my learning from 2004 to 2020 is massive. From go to market to managing the teams to building the product on my own. I could do this because I'm a product guy at heart. That's how I will pivot and create a product for every single stage. I was only I was acting CPO the entire time. Uh,
Okay.
so that's how I was able to think through the next decade. Probably I should look at some larger canvas and not just stick on the vertical company because the industry is small. It's a $1 billion industry total. So software company
Hmm.
can the growth can only be 10-20% or 30% at maximum for the next decade. I'm talking about. So choice for me is do I want to run a lifestyle business? Eka become massively profitable. I think last we were as I said, 9 million profit. We could take the company to 10, $20 million profit, $30 million profit. But then it'll be a good lifestyle business. My children can perhaps come, and that's how families think. Can come. Software is still a very good industry to be in,
Hmm.
but that didn't attract me that much. Uh, I wanted to use something and put on a larger canvas. And I also
Hmm.
started along with Girish and Avinash SaaSBOOMi in 2015, which is not for profit for SaaS, right? Which grew massively also. So SaaS was growing, but I thought I should wait for the next wave now. Maybe ML, maybe do something else. That's all the decision of it was a tough decision. My family still think that I should have continued with Vika. We should have continued with Vika as a family because it's very hard to build a business, as you know. And that to a profitable, sustainable business. The industry doesn't change that fast. Customers don't churn out that fast if you service them well. So it's a very, very beautiful industry, I would say. I love the customers in the industry, love the people in the industry, and you build long-term relationships with them.
Hmm.
So my family was still, I think, was thinking. My wife especially was she thought I should probably start continuing with the business, but I thought it's
Hmm.
good time to exit the business.
Hmm.
So
Okay.
21 is
Fascinating.
when I started thinking about the exit. Yeah,
Hmm.
working on the
Okay.
exit.
Okay. And when did you finally exit? And are you at liberty to share what was the exit?
Yeah, I can share. I don't know the number, but I can share the process. So started 21, we agreed as a board. Okay, let's look for an exit. Then 21 was a peak. We started engaging the PE firms. PE firms saying this industry is small. We don't know. Then we waited for another 6 months time. And in that 6 months, I built a lot of relationships with a lot of PE firms globally. And then SGG, which is a now I think top 10 PE firms in the world, is $10 billion private equity group based in San Francisco. They came to us first. We couldn't agree on the valuation, and the deal didn't go through. But they liked us. We stayed in touch. Then after 6 months, I again met Bill and Nishan, who are the founding managing partner and the operating partner respectively at STG. And I said, okay, now we're ready to sell. Let us know what the deal is. And they offered better terms. Uh, and then the entire process. So in 2 years' time, basically the entire process finished, and exit happened. And in this 2 years, I think the key one, I also prepared myself for the exit. So because I want to make sure that I am exiting and I am not staying for next 5 years because then there's no point. Then I would rather not exit at all. Uh,
Hmm.
So I was, therefore, the next level of team, which I talked about, all these people who stayed with for 10, 15 years, they actually are the ones who also stayed along and give a lot of comfort to the investor that, they can run the company. So I put in a lot of processes, actually. In between 6 months' time, we hired McKinsey. We put in processes, dashboards, a lot of, so that the company can run like a, autopilot. We started measuring, customer health regularly. So we changed the structure quite a bit on how we work. And McKinsey engagement was good. They really helped us put that structure in place. No share from McKinsey's team, and Sid and all these people, really, really good. So we engaged McKinsey for 3 4 months, almost 6 months, I think, and that's how then the entire systems of next scale came into picture. Because I wanted to hand it over the reign of the company with a proper structure in place. Because I had everything in head. So it's easy for me to run, but somebody has to run. It has to go through proper structure, dashboards, proper product planning. So all those things we did in that 6 months to 1 year. And then, so therefore exit for me become very easier.
Hmm. Okay.
So I
Okay.
had declared to the PE firm that, I don't want to continue. And they were very gracious for it, saying, fine, we have a CEO who can come in. They had acquired one more company in the space in between. Uh, so they had a CEO from that. So things does work out from that perspective. They had a CEO, another company in place, and they could merge it with Eka and create a larger entity.
Okay. Okay. Fascinating. Uh, how does a founder think about valuation? You said you didn't like the first offer they gave you. Are there some rule of thumbs that this is what you should expect, like a multiple of revenue, multiple of profit? What, like, why didn't you agree to the first offer? And
I thought at that time we could get more value. We should do more market discovery. I was, see, again, depending on why you're doing it. So most of the founders, at least in my experience, they struggle with the identity, right? I have built Eka for last 15. You also asked me a question: should I introduce as Eka or should together fund, right? So you typically have an identity crisis because you're known for that for 15, 17 years or whatever, 10 years, 12 years, and that becomes your, first family, the people in the company, the business that you are running. So what are you going to do next is a very big thing. So that's the one issue of struggle. It's not as much about money. It's never about only the money. It's always also about identity and what you're going to do next. For me, therefore, two, three things happened. I started Together Fund in 21 as well, along with Girish Mathabutham of Freshworks. Uh, and then Shubham joined us as the third partner. And first one was $85 million. So that also gave me a huge platform which started getting built. And really thanks to Shubham to do all the heavy lifting in the first 2 3 years, because Girish and I was still running Freshworks and Eka respectively. So platform got built, right. So for me, easy to now switch. It's only switching of Eka to a Together platform. So that is the second important piece of that thinking. Uh, that now my earnings will start from there. My identity will shift there, and I'm going to a larger canvas of helping the startups and scaling that. So therefore, value did matter to me, but not that much for the founder. But I think that the key issue is that investors should make money, get their money, and also founders should make money. The issue in exit is not about the valuation alone. The issue is that a lot of time you can get squeezed out, like ours, right? Where this industry is small, your exit is not going to be massive multi-billion-dollar exit, IPO exit. So it's going to be negotiation all around. So I think how do you negotiate, keep things very transparent, and keep the highest governance standard actually are the more important.
mm,
If you see a lot of stories come where either investors took all the money, founder didn't take money, or founder took all the money, investors didn't take much money, right? So that's where the issue comes when the exit values are not very massive. It's not in multi-billion dollars.
how would that work if, for example, you have say 40%, 50% equity in a company, then you will get that of, if the company is valued at 100 million, you'll get 40 million, right? How would it happen that investors took money, founder didn't, or vice versa?
See, there are a lot of clauses that happen in the contracts. So it only depends on how the contract shareholding agreements put it in. Things are not as simple as it may seem. It is not simply a simple percentage. Let's say a company sold at 500 million. It also a question of how much money did you raise, what are the terms and condition linked with that, who gets the money first, how is the PE firm structuring the deal. So multiple things come into place, especially when you look for a secondary transaction with a PE firm or even a strategic buyer. If it's IPO, it's cleaner, it's simpler because pre-IPO, and then also scale is very high. So a lot of terms and conditions have to be thought through. But the biggest roadblock is not that in founders exit. It is about what are you going to do next. And I'm telling you from experience, a lot of founders come and talk to me. Uh, they can get an exit, but the question is, what are they going to do next?
Hmm. Right. Okay.
Because from value
Fascinating.
perspective, you will never be happy. You will think I could have waited a little bit more.
Hmm. Hmm.
So timing is a combination of what you're getting now, what are you going to do next, or do you have something to do next? How do you what are you going to do? The money you're going to get. So all these things have to be thought in place. It's a very spiritual or philosophical plus practical discussion. It's not a simple discussion.
Right, right, right. Okay, fascinating. So you're saying all equity is not equal. Some equity, irrespective of what the sale price
So
is,
so
there is
so,
some equity which is.
so there's preferred shares. There is a
Uh,
dividend. Some preferred shares also. So obviously all equity is not equal. Founder equity is a common equity, at least in India.
mm,
In the US, you
mm,
have different voting rights. India, they don't allow that. When investors come in, they get preferred equity. Preferred
mm,
equity has anti-dilution. It has liquidity preferences. It has certain uh, preference return, which is there. For example, if equity says that we have to give you minimum 10% return. So let's say if I raise the capital in 2014, it is 10 years, let's say, before I get the return. If I guarantee them 8% return, so 8% will compound over 10 years.
mhm.
So
So
that's how.
irrespective of sale price, there is a minimum that they have to receive. Therefore, okay, 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 understood. Okay, interesting. And I'm assuming you would have sold it for like couple of $100 million in that
Yeah, it's
ballpark.
north of that. Yeah, big number. It's reasonably big number for me at least, coming from the family
Yeah,
side.
I'm sure. I'm sure. Yeah, amazing. So you said SaaSBOOMi was kind of pivotal in defining your next journey. Just take me through that.
So SaaS for me is what is SaaS for me? SaaS for me is which I just told you. We started with Krish, Suresh, Avinash. Avinash is the CEO of SaaS for me now, and Girish, right? So back in 2015, we really don't know how to build cloud software companies from India. So we thought, okay, we should all come together and just share our learnings, how to hire a salesperson, how to build the quality in the product, and it's a very context based learning. So that community, which was 40 people in 2040, founded in 2015, became 800 in 2018, and the COVID hit, and the SaaS really grew like a hockey stick. Today, it's about 6,500 plus founders. People come and talk. We have playbooks, which we run across India in various cities, 10 odd cities, including Surat, Bhopal, Chandigarh, and many other places. Calcutta, Hyderabad, Bangalore, of course, Chennai, of course, Delhi. So it has become a movement where founders can come in, especially the SaaS or a B2B founder can come in and they can talk about what they want to hear, what they learned, what they not learned. So it's a very context based learning system. So I got huge exposure. Every weekend we would help the founders. We would meet the founders, seeing what they're building, what help they need. So I get to understand the founders so much. Uh, and also, I started angel investing as well because at that time nobody would invest in SaaS. So founder will say, "Can you put a small check?" So Grisha, I will put 25K, 50K, sometime or 100K check in companies. So by 2019, our personal portfolio was 100 plus software companies or SaaS companies.
Wow.
Yeah.
Okay.
So that's how we, between Greece and I, Greece obviously in whole Chennai circle and other globally was much larger success. So we had ChargeB, name it, Zenoti, a lot of companies in this portfolio. And I had Unbox, which got another exit in India as well, and few other companies. Uh, but overall, the portfolio did really, really well. And then we thought that since we are doing this, why don't we get a little bit more institutionalized version of doing that? So that's how we thought, okay, let's put a fund together. And then Greece wanted to wait for an IPO. We wait for an IPO. We started with a small fund, saying, okay, we'll start with small $5 million, $10 million fund. Uh, Given that it's our own money, we didn't have no idea of how to raise institutional capital for the fund at that time. Uh, but then VCs got to know. So we have Fund One came from three cohorts. We had venture capital firms, all the top guys, Insight, Tiger, Sequoia back then, Axel,
Wow.
Nexus,
Okay.
Lightspeed. They all invested in a fund as funds. We had institutional investors in the US who came in, and we had a lot of founders, 100 plus founders who invested, 100K to $500,000 checks. So Fund One
Wow.
became
How much
$85
was
million, $85 million
85
fund.
million?
Yeah.
Okay. Hmm. And this was
So
set up as a AIF structure
no,
in India.
it's a Mauritius fund. Since
Okay.
Greece is based in the
Okay.
US, we try to uh,
Hmm.
keep it a Mauritius fund, and money, a lot of financial institution money is based out of India. All the
Hmm.
funds are outside of India. All uh, professional
The
LPs
LPs are
institution based
right.
there. Yeah.
Okay. Hmm. Okay. So fund one was 85 million, and you have fund two and fund three also. What is the total?
Fund to now total is about 230 to 35 under management right now, $1 million.
Okay. Okay.
Yeah,
Okay. Fund two is
uh,
about 150 roughly.
yeah, correct.
Something. Okay.
So,
Okay.
so fund one actually we could see the AI wave very early. So the same thing happened. So 2022 is when the Chat GPT was launched, right?
Hmm.
And that's where it also accelerated my exit. I told you the wave of what to do next came in. And for Fund One itself, we have more than half the portfolio is actually AI companies in the Fund One itself because we said okay, this wave is real and we want to start investing in very early on.
Who were the early pioneers that you identified
Oh, we
in
have,
AI?
if you go to our webpage, which is an AI studio right now, we have Composio, which is building integration layer for LLMs. We have uh, Spry was the first investment with the physiotherapy clinic automation software, which automate physiotherapy clinics in the US. We have Rapid Claims, uh, who's focused on art. So healthcare is a big focus for us, US healthcare. So within that, we invested in Spry and Rapid Claims. Rapid Claims is a revenue cycle management automation, which helps you get the claims better for the US healthcare providers.
Hmm.
Then we have
US
Metaforms.
healthcare is a large TAM. You didn't
Yeah,
want to do a small TAM like you were doing in Eka. So, uh, okay, understood. Hmm.
yeah, more than me. Yeah, from investment perspective, things changes of course a little bit, but yes, US healthcare is a large TAM. So we invested in Rapid Claims, Spry, Composio. Then we have Thesis, which is building the generative UI automation uh, infrastructure for generative UI actually. So we have Metaforms, which is an AI research agent. We have Revenue Hero, which is doing pre-sales automation, and now they're doing automation of demo booking overall. Then we have companies like Unstruct, which is building a LLM for unstructured data.
Okay,
Yeah, so these are all pure AI companies.
and these are all
This
like
one,
Indian founders.
all Indian founders. Yeah.
Okay. Hmm. Okay. Early on you told me about your JP Morgan pitch where they said, we cannot back you. You're not IIT. You're not IIM. Uh, but you obviously proved them wrong. How has that shaped how you evaluate and decide whom to back?
See, India has changed a lot, Akshay. Uh, Out of 3,000 plans we've received for in last 3 4 years, uh, almost 50% are people coming from tier 3, tier 4 towns. And they necessarily are not from Ivy Leagues, which I call IIT, plus Harvard, Stanford all put together, is about 15 20% of the deals.
Okay.
In our portfolio also there are some IITs, but a lot of them are from other colleges which are normal local colleges. So we are not. Our criteria doesn't talk about uh, where you came from. Both Grish and I came from small town. Grish is also from Trichy, and he went to a local engineering college in Trichy. Not yeah. So I think we look for fundamentals in the founders, which are linked with resilience, understanding his learning curve, his or her learning curve, which area is investing in, how good is he or she is in building the product. We are a big believer of if you create a world class product, you will start generating revenue. So a lot on that. So India has changed a lot since then. I think back then I would say JP Morgan was right. 2004, right? When India was there was no hardly any product company in India back then. How are you going to trust a trading person claiming to build a software product company from India? Look at the odds of success. I think
Yeah,
from
yeah,
a
right.
professional investment perspective, even today also it'd be hard for us to do that if somebody so much lateral jump from a totally,
Hmm.
I would say, industry which is laggard in technology, the person who has never worked on technology getting a technology firm, it's a massive shift. So I think for an institutional investor it is hard to take those calls. It's massive risk. Personally you can saying okay fine, I trust in you, Akshay, here is the money and you see what happens. But institution has to follow a process because you're fiduciary responsible to manage somebody else's money also, right?
Mm.
So those things come in.
Oh, what is the uh, like again coming back to your evolution as a founder to now being an investor? uh, I think founders have like a bias for optimism, right? Like I can do it is like the motto of the founder, that I will
Otherwise, you can't
make it
survive,
work.
right? You start against all the odds, first of all.
Yeah, yeah, exactly. Yeah, you can't survive if you don't have that bias for optimism. How have you evolved now as an investor? How has that changed? What are the biases you have as an investor now?
I think it's still very early for investment journey for me. I think I am very biased towards larger markets.
Okay.
Yeah, I love to give a lot of long rope to the founders, given that I have gone through a lot of ups and downs and zigzag and changing the journey pivots. So I tend to give much more longer ropes to longer rope to the founder, especially if somebody showing grit and resilience and ability to learn. Uh, but I am biased against the market. I think I look for larger markets because I believe larger markets give you a little bit more room to move. You can go wrong and come back if you have the capital, if you know how to preserve capital. If you pick a small market, then it becomes very, very hard. So what happens is if you pick a small market, even if successful, you are mildly successful. The odd against success is so stacked against you that you might as well pick a large market and fail big, you know, or you become really, really big if you are successful, right? So I believe in that philosophy now that and that's what I coach founder also. Look at the market, and many founders coming from India don't look at the market because of natural history from India, right? We all tech people, they all come together and start building companies. But I think market does play a lot of role. A lot of tailwinds in the market can really help you scale the company faster. Like you see in B2C, right? There was a tailwind of e-commerce companies. So Flipkart came out of that. The tailwind of entire delivery companies came. Zomato and Swiggy came out of that, right? And then the tailwind of D2C brands came out of that. Therefore, Nika came out of that, and a lot of old, commerce-based brands and platforms come into picture, right? And then the payment wave came in India, which is easy to understand. So you had PhonePe got built during that way of time. So and now Grow and Zerodha and all that get built based on the stock market boom. So I think so. Therefore, if as a founder you can catch those waves, sometimes you can't design for it, sometimes you may not plan for it, but right time, right place also does make a lot of difference. So as an investor, for us, we spend a lot of time on. I spend a lot of time in understanding the markets. Not that I have a crystal ball, which markets will do well, but I think just a narrative on the market is really helpful for the founder. I think. So I think I
How do
have
you
that
understand
one bias.
markets? Like by speaking to
But
founders in that market, or
founders, companies, reading the signals, do a lot of fundamental thinking. Like for example, now tariffs have changed, right? Which industry is going to grow a lot? Which industry will get impacted? Which industry won't be impacted as much? So to think through that, all those things a little bit ahead of the curve. And I have a lot of knowledge about the markets because I've been reading for last 10 to 12 years. Like US healthcare is what I identified very early on. And I could do that because I've been reading since 2012 about US healthcare. It's not today. So I have a full understanding of how so a lot of reading has to happen on the markets over a longer period of time for you to understand.
Mm.
So I know the trends. I know with every industry, in every technology wave, how the industry is changing to some extent.
What do you recommend as sources for reading? Like, do you read a Bloomberg or what do you read? Like,
I read. Um, so there's no recommend. So see, it requires a lot of thinking. First of all, it's not just reading wise. I tell you what I read. I read WSJ, FT, which is Financial Times, Economic Times, uh, Bloomberg at times on business side, and I read New York Times. Of course, I read Indian Times of India, TechCrunch. That's the normal reading on what is happening on startup. But then I go and read about what companies are getting funded, which industries, how they're shaping up. For example, Vinod Khosla put out a very good thesis on the entire healthcare. He had a 110-page thesis on that, so I read that.
okay.
Different theses on
Mm.
different things. Right now, for example, for AI, I'm reading research papers actually. So
Okay.
readings keep
Wow.
on changing, so there's no standardized list. So one is news, but news is not going to take you much further away. You have to go deep. Uh, like for example, if you're now building an AI company, you will have to understand the research, in my opinion. Or you have to understand the use case really, really well from domain, like I did back then. But I think more fundamentally, you have to understand the research and what's going to come next to be able to relevant in the next 5 to 10 years.
How do you, like you said, in founders, you look for resilience, product, and learning curve.
Yeah,
Um, I think resilience you can see by based on their history, how long they stuck at things, etc. Product, you could probably have a demo of the product
yeah,
and
demo, yeah.
judge. How do you judge learning curve?
That's also in the history, right? So if you're from a small town and where you have made, number one, so education background shows. Sometimes, see, for example, in India, since we came from small town, I know that when I was in 10th grade, I had no idea of IIT. I was in a small town in Moga. Nobody had gone to a local engineering college also, forgot about IIT. So lack of exposure also makes a difference. So you have to understand the cultural context a little bit in the history, that where the person is from, which conditions they were born and brought up, and therefore what they learned from every situation, and then how did they apply that. See, one is learning is okay, but then application is even more important. So you will see people or some founders who will learn and apply also extremely fast. That's also is actually embedded in their history.
Hmm. Okay. 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 Fascinating. Let me kind of wrap up the conversation with getting some learnings from you. So you spoke of your first approach towards pricing, that 1 year salary for a person in Europe is $70,000. So I will sell my product at $70,000. What have you learned about pricing since then?
I think pricing has to be based on the value you are delivering. Lot more times we leave a lot of money on the table, because especially when you're a founder looking for the first few deals, you want to just sell at any price, which is fine. Okay, first few deals you look at this price. But a lot more as you scale the company, I think a lot more can be done on the pricing side by understanding how much value you're delivering to the customer. So you talk a lot about the value delivering, or value in the service or the product that you're delivering to the customer, and then think about pricing. In the short nutshell, that's the mental framework. Now, within that, if you scale up to $50 $100 million, you can use a lot of pricing consultants also. You can use a lot of negotiating techniques to do that. So all that also helps. But
And
in the
how do
early
you evaluate
stages,
value that you're adding?
the ROI. So let's say in case of AI now, I'm coming to saying, Akshay, you run a company with 1,000 people. Using my software, you can reduce your customer support team from 200 people to 20 people.
Ah, okay.
Right? So now you're
Clear
saving
ROI.
you're saying 180, you are saving 180 people. So ROI is one big measure. Now ROI sometimes is tangible, like in case of people or productivity, which is AI is bringing in. In our case, it was managing the risk.
Hmm. Ah, okay.
Yeah. So
The
it was
the
not
P&L
simply
mark to market
correct,
risks.
correct. And risk, like for example, today tariff is changing the markets. Market is coming down. You have to take the call right now. Should I sell my futures or should I hold on to futures? If you wait for 24 hours to get the right data, you are anyway doomed. You might my whole position may get wiped out, right? So the value, how do you price that value of risk, right? So you also talk a lot of risk. So there are multiple angles to it: cost saving, revenue generation, or risk management.
Hmm. Okay, okay. Uh, what have you learned about customer adoption? So, like, how to really get customers to adopt and love your product.
They're two different things. I think first you have to design the product for customer love. I think it starts with design thinking. I think if you say I won't compromise on small thing, even a small pixel on the screen has to be designed really well. Uh, so first point of love as first said is the user interface. Today, look at ChatGPT, right? That's a user interface you got used. They had a bigger challenge of how do you build a new UI for the new AI world. Today, all of us are used to that kind of chat experience within ChatGPT, right? So that's the first love. Second love is the ease of use, right? How easy I'm able to get to the task that I'm able to get to. Do I have to make 5 clicks, 3 clicks, 1 click? So you have to design for that. Then the loading time, right? Is screen taking 10 seconds to load, 5 seconds to load, 2 seconds to load? So it makes a lot of difference. Like I'm just giving examples side by side in AI also. Grok is really fast. It'll come within 1 second. ChatGPT is taking 5 seconds. So some users are saying that Grok is really fast. I love it, right? So those things actually start adding to the customer love, and that is the actually what you call a product craft. You have to design the product for that. For that, engineering has to then design for that particular experience. Uh, so that's how the first is the product love. Customer adoption then is a work of how well the workflows are crafted in a B2B. that is Akshay is able to do his work, for example, recording a podcast and editing the podcast and releasing the podcast, how fast and how seamlessly I can do that. That's how the adoption starts increasing. So you have to
So
design the
that comes
product for the
from
user.
empathy, like to
Yeah.
really study their workflow and then map it out on the software.
One is the empty, and second is the eye for the detail.
Ah, okay. Hmm.
Yeah.
Hmm.
You may have empty, but you may not have eye for detail. You will make silly mistakes. I've seen products where spellings are wrong, especially it used to be. Uh, Screens are not designed properly. The colors are jarring.
Hmm. So founders who come and pitch to you and have these kind of issues in the product would not make the cut.
Correct. They would not.
Like eye for detail is an important thing
Yeah.
for you when you evaluate. Okay.
Yeah.
Mm, Interesting. Okay. Um, what have you learned about sales? Like starting from your one-to-one selling that you were doing first. How does that work? And then how do you build a sales organization?
See, sales. My biggest learning is I did most of the sales by my company in the early days, right? So sales is people buy from people. This one biggest learning. So what does it mean? It means that when I'm talking to you, there's a certain kind of trust being established with every statement I make, every conversation we do. So it's about being genuine in the relationship and then walk the talk. If I come and tell you my phone is going to, give you SMS and it gives you this kind of email, it'll work like this. It pretty much has to live to the promise. So the way the good sales people are very very genuine in the conversation with the buyer. They will tell you what's the problem, and it's not the problem because all the problems may not affect you, right? Uh, if the battery life is not 10 hours, 8 hours, it's okay to call it 8 hours and not kind of fib your way through, oh, I have the highest battery time for 16 hours. You may win the customer early on, but that customer can never become the customer advocate, right? And you will lose the trust in the market over a longer period of time. So I think building the trust is the biggest factor in sales.
Hmm.
Uh,
And
and
how do
that
you scale that, like to an organization level? Like you as an individual can focus on building trust, but how do you build it into the DNA of the
you have
company?
to hire
And
the right people first of all. You have to pick the right
Hmm.
people in the sales who you believe can resonate with this some basic philosophy of. So let's say I talk to you, you will be able to understand whether I'm a good salesperson or not. You will see a sales. So salespeople have this natural ability, first of all. So when you interview salespeople, you will see that they have natural ability to connect with you.
Hmm.
So if the salesperson is able to connect with the interview, you will know that this person is a good, reasonably good salesperson or not. Then comes the value system of the salesperson. So a lot of salespeople are various category types. Some people really blow it up 10x and then kind of sell you something and you get looped into that. Some people stay very genuine and focused in what it is and they bit more longer game. It will take longer for a buyer to buy, but once somebody converts, they stay with you for longer. So you have to decide as a founder what kind of culture you are going to build.
Hmm.
Uh, and once you decide a founder, you will start saying that sales team will start following that. It's an art and a science. It's not easy to hire salespeople because salespeople are also very good in selling to you, right, in the interview process. So,
Right.
and for Indian founders, it's incredibly hard because most of them have never hired salespeople, right? And they have not
Hmm.
been in sales situations.
Hmm.
So it is a bit hard.
How do you do that critical hire and sales? Like, say you're hiring for someone who lead a territory. What? So one interview may not cut it, right? Like, how do you evaluate?
See, for me, a lot goes with my intuition. For me, uh, see, typical data you see is have they met the quota, what kind of sales they have done before, what of customers they have done, do the references. But that I don't think is the final decision making factor. For me, if I'm able to connect with the salesperson, and I think the value system is going to match, I will hire. Otherwise, I won't.
Hmm. Okay. You don't come across as a salesperson, even though you've told me multiple times that you were the salesperson number one in the organization. Uh, you come across as a little more introverted. I don't know. Traditional
But
wisdom
why,
says salespeople cannot be introverted.
but
Is
why
that
do you say
true?
that? But why do you say that I don't come as a salesperson? What trait you think tells you that,
Uh,
or what
I-
feeling
this is
is telling you that?
no. I mean, it's based on multiple interactions that we've had. It's. I just felt like uh, the I mean, so like someone who's very salesy tends to uh, go an extra mile to establish some sort of connect, like, oh, okay, you interviewed him, oh, he's a good friend, etc., or find those points of commonalities, is what I have seen. So
You're
just
right. Yeah.
basing it on that. Yeah.
Yeah, that's right. So a lot of people are very salesy in purchase. So all salesy people may not be the best in sales. That's exactly what I'm telling you. So see, my persona is very well suited for large enterprises where the relations has to be more enduring. You can't fib your way through salesiness, because even if I'm able to impress you, there's a process behind it. I have to go through
Mm,
multiple channels, multiple people, to be able
mm,
to convince. So the trust factor has to be extremely high, and the relationship has to endure.
mm.
See, relationship,
So it's more
because
about empathy and authority and trust, like.
yeah, and understanding the real need of the people. I want to solve your real
Mm,
problem.
mm,
I
mm,
don't want to simply sell your product and move on, right? I want to solve the problem
mm,
and stay connected with you forever.
mm, mm,
So the
mm, mm,
lifetime value
mm.
from the customer is very high,
Right,
and
right,
that
right,
can
right.
only happen
Okay.
if the value system has to match the value of the product and the services and the system have to match almost in like 80% range. If it is
Hmm.
not matching, it'll be very very hard.
Okay. 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 You said that to to move on from Eka, you wanted to put in processes, and you even employed McKinsey for that. What are some of those things which you will do differently, considering that maybe the next time you start a venture, you will want processes from day one? So what are some of those guidelines that you would suggest to founders in terms of those processes which make it possible for a founder to not be like the key person in the company?
Like you said, I think start giving devoting enough time for the see when you're a second time founder is different. You know what not to do, at least to large extent, to some extent, if not everything. So, and you have a little bit more resources also. So there's a first of all difference in that. If I'm a first time founder, I raise small amount, I have only a little amount of money, then I would just go for growth first. I just want to say that out very clearly. So processes can come a little bit later as I start scaling. But
Hmm.
when I start for the second time round, like in together, both creation, I say, okay, let's put the processes in place, which is in line with the scale of the firm. So when your firm is managing, you know, 250 to half a billion AUM, it is not the same as managing 5 billion AUM. So you can't put the processes. So you have to put process to the scale, but you start thinking of the basic processes in place. Do you have a CRM in place? Do you write investment memos? How the investment memos are written? How is information shared among team members? So you start doing basic things. How the meetings are run.
Are processes essentially about documentation, having a single source of truth, and everyone being able to access that?
No, processes are the first fundamental processes is the coming being able to the same page. So if I view a situation, let's say when the first customer call comes, you and I should be able to respond in a very uniform fashion. See, everything is ultimately focused on delivering a uniform customer experience and uniform employee experience. If you look at company has two faces, one is towards customers and second is towards employees and third is shareholders. I'm going to leave that out for a moment. So all the processes that you think of will bring the organization at the same page for either for a customer or for an employee. When employee join you, how should you be greeted? How should your induction be? What you should be told in place. So now, as a founder, I might be able to tell you very articulately. So how do I scale that? So I document my culture, I document my values, I document what 5 lines each employee should say, right? So that's how those things start coming into picture.
Okay. So, for
So
example, if a founder is pitching to together, no matter who is hearing the pitch, they will have a standard uniform way of evaluating that
correct,
founder, and
correct.
there will be some sort of a checklist on which there will be some scoring mechanisms, so that there is uniformity in how pitches are evaluated.
And yet we give so now in this is a perfect example, a good case study. Now every since even when the processes are common, you want to give freedom to everybody to say you put your own you know
Hmm.
aspect on
You
it.
don't want to kill creativity. Yeah.
Yeah, it's not possible, right? Therefore, every partner is a different way of picking companies, different way of investing. So in investing world, you can't automate every single thing. You can automate the information actually, but you can't automate the judgment part of it. So you want to make sure the creativity is not killed. But in an operating business, when I'm delivering a product or a service to you, everything end to end has to be uniform. Uh, so process has to therefore match with the scale and the nature of the business that you're in.
Hmm. Okay. Okay. My last question to you. Uh, what are the AI opportunities now? Like the world of AI is changing so fast. What are you looking at? A lot of people are saying SaaS is dead. So, and I think like Satya Nadella also said that, like, so do you agree with that? And what's your take on where the next billion-dollar companies are going to be created? What technology will they be built? How will the company, what will be the org chart of that company? Like people are saying that 5-member team with AI agents is going to do what a 100-member team used to do earlier. I don't know how much is hype, how much is real. Can you like give me your take on it?
Yeah, SaaS directionally is dead. Directionally, there are companies who can still make money and still survive as a business. But will it create unprecedented value going forward like it did in last decade? Clear answer is no. Because the productivity shift is massive, the buyer behavior is, or the what it can do for you changing in such a drastic way. I don't think SaaS can exist in a similar avatar as it did in the last decade. So SaaS, like we knew, I think is over for anything somebody is trying to build for the next decade, for next 10 years. Number one. So I fully agree with that particular thought process.
What does it mean when you say SaaS is dead? Is it like the pricing will come down and it'll be commodity, or
No, it will get
what? Like,
replaced. Like I'm trying to explain to you, right? So what we did in SaaS or previous application software or any software is we basically automated a workflow,
yes.
which means you will get a form. So let's say Akshay wants to interview Manav, your form will come in. Today my interview is Manav, it's at this time. So then you say, okay, let me then go and mark the calendar. Calendar is marked. Then let me now open, I will send a summary agenda to him, and then I will open Zencaster and I will steps to Zencaster and open it. So that's what software will automate. If you're doing, let's say, million podcast as a company, you will make sure everybody is following the same workflow, and you will do that. Software will help you do that. Reports will come, who is doing quality, did it happen on time or not. That's how you tracked everything, right? But now AI, you can just give one voice command saying, "Hey, ChatGPT or product XYZ, can you? I have a podcast with Manav Garg at 9:30 a.m. India time. Can you please create one schedule for me? Open the Zencaster, send this signal to him." That's all. And AI will do all the activities for you, right? So productivity paradigm has shifted totally. So therefore, the way you build a software or way you build a system now is not same as you built in SaaS first of all. So SaaS is not required. It's not that SaaS is dead. B2B will still thrive. Enterprise will still spend money on technology, but the budget will shift now. So now, if Akshay, who is running a multi-million dollar podcasting business, will not have to buy a SaaS software to manage that entire workflow. You may have 50 or 100 podcasts around the world. You don't have to do that. All of you can use one simple AI software, which can just one command will do all these things, and in the end they'll give you a report along with a
Hmm.
summary of the podcasting, the quality parameters of the podcast. So now
Hmm.
imagine how the world is going to change, right? So now
Okay. Yeah.
you have to build for that. So it's a paradigm
Hmm.
shift. So there are two different
Hmm.
planes we're talking about.
Okay. Understood. Okay. Is this possible today that I can use an AI agent and that agent can actually send a calendar invite?
Yeah, possible.
Okay. Which tools? Or
So you can build it using Composio, for example. You can use in a platform itself. You can use Emergent. We saw the demo of a company day before yesterday called Optrix who can do that. So there are many companies who are able to do
okay. Okay. And these are AI agent companies basically.
that. Yes,
So
yeah.
AI agent is like what is going to replace SaaS?
In the current context, yes. You never know what's going to come next.
Right. Okay. Okay. So SaaS is dead. We covered that. Now, the other thing which a lot of people are saying is that the way companies will be built, the way next generation of
Yeah.
startups will
So
be built, they'll not need VC money. They will not need large teams. What is your take on that?
first of all, the team size is already shrinking. In our portfolio companies, also you can build a software with 3 people, 4 people. See, if you know what to do, first of all, let me differentiate on what I mean when I say small team. If Akshay or Manav knows what exactly to be done, you can do with 3 people. Because software code today, if you can start coding using all this platform like Bolt, Emergent, Lovable, Cursor, you can start building software just now. Just put a command there;
Hmm.
they'll build the first version for you very quickly. So software
English is the
business,
new
yeah,
software
is
coding
software language.
language.
Yeah, so that itself
Uh,
is automating. It's not fully automated. It still takes time to go to production, but we'll get there in some time. 1 to 2 years time.
hmm,
So therefore, the teams are very small if you know exactly what to build. Uh,
hmm,
Now, money required for the business, I'm coming to the second part, VC money or no money, depends upon how much money you have, which industry you're building. If you're building a core technology product, then you will need money because you have to hire engineers, which can cost you massive. Salaries in Valley is different. Salary even in Bangalore for top and talent is very, very different. So you may need some money for that, but you can get to profitability much faster if you hit the right curve. Or you may say, I want to do the land grab and I will raise a lot of capital and grow very fast in sales and marketing. So it really depends on person to person. But yes, you can build a bootstrap company much faster and take it to profitability also much faster if you hit the right area. That's possible today. So VC money, see when people talk about money, I have given an answer. The standard, I have an answer which is more philosophy, more practical and rooted in the old economic business also. That from time immemorial, go back 50, 70 years, funding is an essential element of building a business. Whether you take a bank loan, whether you take a VC is a new asset class, you take a venture capital money or take money from family and friends. So businesses will always need money. May not be startup stage. You may need it for growth. You may need it for pre-IPO. So funding is only one of the elements to make your company successful. It's not the only and the uh, leading element to make you successful. People call it leading element sometimes because it can go through ups and downs. Let's say you start building a product today. You didn't raise any capital, and suddenly technology came. Suddenly, OpenAI came into your market. You have no money left. You have to shut your business and start all over again. If you have money, you can pivot. So money gives you a little bit more more latitude to make mistakes and pivot your business much faster. So those are the values of money. Whether you raise from your family, if you have a wealthy family, you may not raise capital ever. Why not? Why to raise capital? But if you look at even Reliance also raises capital, right? They raised
yeah.
from so that's the second part of capital. You also
Hmm,
raise capital to get knowledge, to get access to a network, access to a
hmm,
partnership. So that's another way.
right.
That's another advantage of raising capital. So capital has a different aspect to it.
Hmm, hmm, hmm. Okay, okay, fascinating. Uh, are you still looking at healthcare, or are you now looking at more like agentic AI companies? What are
Okay.
you bullish on?
I wrote a blog also on what opportunities I'm looking at right now. So obviously, agentic AI is one big part. I said we already invested in agentic AI 2 years back. That's in our portfolio. Touchwood is doing really well right now because we invested early. US healthcare still is a multi-trillion-dollar opportunity. There are many places we can build a software. In Fund 2, we invested in a company called Confido, which is doing front and back office automation for hospitals. Like nurse calls you, so he's automating all those things uh, on how entire hospital systems can be automated. So healthcare, yes, we're still big believer in healthcare, big believer in agentic automation, big believer in sales and marketing. I think tech. I think a large CRM company should come. Salesforce is growing. It's a good company. I think there's a lot more room to create good companies there. Customer support software is a massive industry where Freshworks is. ITSM, we see Atomic Works getting started and few others are coming up. Those are very, very large areas. There's a massive opportunity for vertical software companies also. And I'll take a minute to explaining what has changed. So when we, in a software world or in a cloud world, we build software to only automate software. So therefore, a software could access about 2 to 5% of IT spend of a company, right? So for example, for a food company, if there are, or for a call center, if there are, let's say 10,000 people coming, they will spend about 2 to 5% on technology on call software, CRM software, support software, and so on and so forth. But now with AI coming in, also going after salary time because AI is able to do some part of human work. So suddenly your TAM
Right.
becomes very big, right? So you are not. So when you're going for a call center, you can get a new age call center which is all AI driven, and
Mm,
you may still charge the customer per call, right? But your cost is much
right.
less. Uh,
Mm,
we have a company called Hunar.ai which is doing blue collar recruiting now using AI agent, voice agent.
mm,
So their cost is coming down. They don't have to hire more recruiters which are manually doing it, right? Still deliver the same
mm,
value to the customers. So
right.
therefore, you can build large vertical companies now because software plus salary time is coming together.
Mm. Should founders still be selling it as software? Should they be selling the outcome? Like, say, a per call pricing is different from a software pricing.
It is
or
changing.
a
So
per person hired pricing is different from selling a recruiting tech software.
so it is changing. So outcome based pricing is coming into picture at all. So pricing will go a massive shift in AI for sure as well.
Let me end with any words of advice for founders in, like, small cities like you are from. Any words of advice you have for them, like people who are very early in their journeys?
I think it's a time for the generation to build. I'm a big believer that people who are in colleges, students, which are early in their careers, I think they are AI native. People like me,
Yeah.
I have to work really hard to learn what's happening in AI. But for people who are in their 15 plus onwards, anywhere between till 30, they are born in the AI era in many ways, right? They're able to adopt to AI technology much more natively. Therefore, more creative juices will flow. And India is a place where you can build today. There's a capital availability, people are taking risk, opportunity availability, both domestic and globally. So I think let's go build. That's my advice. I think if I were may, I think every young person should take a uh, once time take this challenge. Of course, having said that, I want to give caution that entrepreneurship is not for everybody. You go through a lot of ups and downs, mental resilience. So if you think you have that mental resilience, you're able to face the challenge, because it won't come without challenges, right? There'll be ups and downs. There'll be days when you will feel really bad, when customer reject you or employee doesn't come you, it doesn't show up for work. You feel really bad in those days. So I think, having said that, if somebody wants to change things, it is the best time. You are a change maker. I think is the best time.
Thank you so much for your time, Manav.
Thanks, Akshay. Thank you.